Florida real estate just split into two speeds. In one lane, homes linger for 3 months. In the other, a single penthouse reaches into tens of millions. Here's the ground truth, measured in days and dollars, and playing out from Orlando to West Palm Beach. In December of 2000, the Fort Lauderdale metropolitan area tied with San Antonio for the second slowest housing market in the country. Homes there sat for an average of 99 days on the market. Miami took 92 days. West Palm Beach took 87. 1 year earlier, those same December clocks read 83, 82, and 81 days, respectively. Slower, by weeks. Days on market is the quiet metronome of a market. It measures the average time between listing and contract. When it climbs, buyers gain time, leverage, and choices. When it falls, sellers call the shots. In South Florida, the clock lengthened in 2,200, even as something unexpected happened. Closings rose year over year in December. Single-family sales increased 10.6% in Broward County compared to December 2024. In Palm Beach County, they climbed 23%. In Miami-Dade County, they rose 3.7%. More sales, but slower deals. A rebalancing, not a retreat. Zoom northeast to Orlando, and the tempo shifts again. After a very slow 2025, January lit up the new year with a surge in activity. New listings jumped 59% from December to January. Homes under contract with pending sales rose 24% over that same stretch. Yet overall sales fell 25% from December to January, while the average property lingered for 81 days, the highest days on market in 10 years. Two signals at once: supply returning, demand stirring, but transactions still taking their time. In the middle of this mosaic, interest rates matter. Local agents say they've been creeping down to about 6%. As they edge lower, sellers step forward. Listings rise. Buyers are able to negotiate concessions, closing costs here, a repair there, while still meeting sellers who can profit. That's the texture of a market moving from a pandemic-era sprint to a more balanced jog, with leverage tilting slightly toward the buyer. The picture gets more extreme along the intracoastal in West Palm Beach. Over the past decade, luxury home prices there have climbed 187.3%, pushing the median luxury sale to roughly $4 million. That rise is more than twice the national luxury increase of 82.5%. Even within that city, the top end has been sprinting faster than everything else. While overall single-family prices rose 18% year over year, the high end jumped roughly 50%. On neighboring Palm Beach Island, the median home value sat near $9,800,000 as of October 2025, an increase of 118.2% over 5 years. Those are not minor adjustments. They redefine entire neighborhoods. What changed? Money moved. Since 2002, more than 250 financial firms have established a presence in West Palm Beach. The phrase Wall Street South is no longer a slogan, it's an address. Capital followed in glass and steel. One developer has committed an estimated $10 billion to transforming downtown West Palm Beach into a global business hub. The skyline tells the story. The Bristol, completed in 2019, reset price expectations and proved the city could command Miami and New York level numbers. It was followed by Olara, Forte on Flagler, Alba Palm Beach, and the Ritz-Carlton Residences, West Palm Beach. Then came South Flagler House, where prices start near $8 million and climb past $70 million. A former chief executive of a tech giant recently went into contract for a roughly $40 million penthouse there after selling his oceanfront Palm Beach estate. In this new calculus, a $10 million to $20 million residence has become a standard entry point for certain buyers. At Maison d'Or, a 19-story boutique tower with just 39 homes, pricing starts around $5,700,000. Now step back and trace the causal chain. What happened? The blazing pandemic rally cooled in 2005. Why? Listings and inventory rose, interest rates earlier had climbed, and the market shifted from low supply and frantic bidding to longer timelines and more negotiation. Who is affected? In South Florida, buyers are suddenly choosier because homes sit for 87 to 99 days on average across major metros, giving them time to ask for closing costs or repairs. Sellers can still walk away with gains because year-over-year closings climbed in December. In Central Florida, sellers are re-entering the market at scale. New listings up 59% month-over-month in January, while buyers see more pendings up 24%, but must accept that average days on market have hit 81 and sales dropped 25% from December to January. And on the coast in West Palm Beach, the ultra-luxury segment is operating on a different plane entirely, buoyed by corporate migration, billion-dollar commitments, and a tightening circle of best-in-class addresses. In practical terms, the transition shows up in simple ways. A father of 3 searching in East Orlando felt the pivot in real time. For 2 months, he and his family saw 1 or 2 viable homes each week. By January, the count rose to 3 or 4 a week. More doors opened. More choices surfaced. That's what a 59% month-over-month jump in new listings looks like when it hits the ground. Not abstract figures, but actual homes to tour. South Florida's numbers carry their own freight. In December 2020, 5 Fort Lauderdale listings needed 90 days to secure a contract, a 16-day increase from the prior December's 83. Miami required 92 days, 10 more than the 82 a year earlier. West Palm Beach took 87 days, 6 more than the prior year's 81. Those extra weeks reshaped behavior. With inventory up and prices stabilizing, buyers are emboldened to negotiate. Sellers, seeing that more time may be needed, agree to concessions they would have dismissed 2 years ago. Yet the data insists on a counterweight. Single-family closings in December rose 10.6% in Broward County, 23% in Palm Beach County, and 3.7% in Miami-Dade County compared to the previous December. Deals are not vanishing. They're recalibrating. Orlando's pivot is defined by supply rushing back and patience being required to close. The 59% leap in new listings between December and January reopened shelves that had been bare. The 24% rise in pending contracts over the same stretch showed buyers were quick to reach. But the 25% decline in overall sales month over month and the 81-day average days on market, the longest in a decade, confirmed that the path from offer to closing isn't instantaneous. Interest rates settling near 6% are a lubricant, not a miracle. Meanwhile, the top of the market in West Palm Beach keeps rewriting what passes for normal. A median luxury sale price of roughly $4 million is not an outlier when waterfront towers begin at $8 million per unit and stretch beyond $70 million. Maison d'Or caps its scale at 39 homes across 19 stories, permanently limiting supply. Downtown projects like Mr. C residences on Okeechobee Boulevard are built around hospitality-driven amenities, appealing to buyers who want walkability, fine dining, and immediate access to offices and cultural venues. As wealth concentrates, ripple effects extend into neighborhoods such as Northwood and Southland Park. Even single-family estates are shifting. One high-profile investor is assembling a multi-acre waterfront compound along the Intracoastal, a tactic once mostly confined to Palm Beach Island. These aren't just big tech at headlines, they are the scaffolding of demand. Since 2002, more than 250 financial firms have planted their flags in West Palm Beach. The promise of durable, high-compensation jobs supports long-term purchases. That base of employment, paired with tax and lifestyle advantages, is why brokers describe the change as structural. It's also why the high end can move into a more selective phase where only best-in-class properties command premiums without signaling weakness. The rest of South Florida is being pulled toward balance. Fort Lauderdale, Miami, and West Palm Beach metro areas sat among the 5 slowest in December 2025 when measured by days on market, with only Austin, Texas, outrunning them at the very top of that slow list. But balance doesn't mean stasis. Contracts are already reappearing. Agents on the ground saw a year-over-year rise in written contracts in January 2026 as the seasonal second quarter peak approaches. In other words, the long December window may close a bit as spring arrives. If you're thinking about the interplay of all these numbers, a pattern emerges. The state is not moving in one direction. It is splitting. In Orlando and across Central Florida, more listings and an uptick in pending contracts signal a gradual thaw, even as sales volume month over month dipped 25%, and 81 days on market asks everyone to be patient. In South Florida, the basic rhythm slowed. 92 in Fort Lauderdale, 92 in Miami, 87 in West Palm Beach. But demand persisted, with closings up year over year in December by 10.6%, 3.7%, and a full 23%, depending on the county. On the ultra-luxury waterfront in West Palm Beach, no freeze was visible. The median luxury price hit roughly $4 million. Luxury prices rose 187.3% over a decade. The high end jumped roughly 50% in a year, while overall single-family prices were up 18%, and a penthouse went under contract near $40 million. Across all of this, leverage is redistributing. Buyers in South Florida now have time to scrutinize inspections and negotiate repairs. Sellers can still accept solid offers because closings remained robust in December. In Orlando, buyers can choose between more homes as listings widened by 59% since December, and sellers, sensing rates near 6%, are bringing properties to market again, sometimes sweetening the deal with concessions that help buyers bring cash to the closing table. The language used by local leaders, balanced, buyer-leaning, matches the math. A decade-high 81 days on market in January, a 24% jump in pendings, and a 59% jump in new listings captured in a single month is what rebalancing looks like, spreadsheet to sidewalk. There's also a seasonal pattern threading through the data. In South Florida, the second quarter tends to be the crest. As January 2026 written contracts ticked up year over year and the busiest period neared, the December slow lanes looked less like a stall and more like a runway. The same frame fits Central Florida, where momentum in new inventory and pendings arrived precisely as spring approached. Even within West Palm Beach's luxury orbit, selectivity is becoming the watchword. When prices begin at $8 million in a marquee tower and pass $70 million at the top, every detail matters: views, services, architecture, and brand. A 19-story tower with 39 homes is not just a shape, it is a promise of scarcity. When single-family luxury surges roughly 50% in a year next to an 18% overall rise, the gap between best-in-class and merely good widens. And when a median home value on Palm Beach Island registers around $9,800,000 after a 5-year climb of 118.2%, spillover into West Palm Beach's neighborhoods becomes both natural and necessary. All of this returns us to the central dynamic. Florida's market is rebalancing, but not retreating. In Broward County, the 10.6% rise in December single-family sales sits beside a 99-day average days on market. In Miami-Dade County, a 3.7% uptick in December sales coexists with 92 days on market. In Palm Beach County, a 23% December sales jump pairs with 87 days on market. In Metro Orlando, a 59% leap in new listings and a 24% rise in pendings in January occupy the same month as a 25% drop in overall sales and the longest average time to sell, 81 days, in 10 years. Rates hovering near 6% knit these parts together, tilting sentiment upward and coaxing sellers back into the game after a slow 2025. The human scale makes the math tangible. In East Orlando, a family search went from 1 or 2 new possibilities a week to 3 or 4. That's the lived expression of supply coming back. In Broward and Palm Beach, buyers who once had to waive inspections are now asking for repairs or for a seller to pick up part of the closing costs, because listings can sit for 87, 92, even 99 days. That's the friction turning into leverage. The skyline is the other expression, where numbers become shapes. A $10 billion commitment to West Palm Beach's downtown is visible in cranes and cores rising over Okeechobee Boulevard. South Flagler House enters the conversation at $8 million and ends it beyond $70 million. Maison d'Or distills the supply equation to 39 keys for an entire tower. The Bristol's completion in 2019 marked a hinge. Before it, West Palm Beach was often the second choice. After it, the city commanded a different price level. Over the past decade, 187.3% growth in luxury prices confirmed the hinge stayed turned. If you prefer the micro to the macro, look at the calendar and the county lines. December 20, 2005 in Broward, 10.6% more single-family closings than a year earlier, 99 days on market versus 83 12 months prior. December in Miami-Dade, 3.7% more closings, 92 days on market versus 82. December in Palm Beach County, 23% more closings, 87 days on market versus 81. January in Metro Orlando, new listings up 59% month over month, pendings up 24%, overall sales down 25%, 81 days on market, the longest average in a decade. January in South Florida, a year-over-year rise in written contracts as the second quarter's crescendo neared. Each figure is a tone. Together, they create the score. What comes next? Start with the base case and then map the edges. The base case through the second quarter of 2026 is a steady normalization. In Central Florida, more listings continue to hit the market. Buyers keep writing more contracts than in late 2050, and the average days on market holds elevated near where January left it, easing only if the early year pendings convert smoothly. In South Florida, days on market remain longer than a year ago, maintaining a buyer-leaning feel while closings remain resilient into the seasonal peak, particularly in Palm Beach County, where December's 23% annual gain signaled deeper demand. Along the intracoastal in West Palm Beach, the ultra-luxury tier stays selective but supported. A median luxury price near $4 million, deal-making that starts at $8 million and peaks beyond $70 million, and a decade-long 187.3% climb in luxury pricing point to endurance rather than froth. Two things are worth watching closely. First, the trajectory of mortgage rates around 6%. If they edge lower into spring, listings in places like Orlando could keep climbing off January's 59% month-over-month surge, while pendings build on that 24% lift. If they reverse, the 25% December to January sales dip could deepen before summer. Second, the balance between inventory and velocity in South Florida as the seasonal second quarter arrives. If written contracts continue to rise year over year into April and May, December's 87 to 99 days on market should compress. If not, the 3-month timeline could persist even as closings stay positive, requiring more concessions and patience from sellers. This is Florida real estate in early 2002-06, a market that is not ending, but evening out. The sprint slowed to 99.92 and 87 days on the coasts. The shelves refilled by 59% in Orlando. Pendings rose 24% into January. Sales took a 25% month-to-month step back, even as December closings rose 10.6%, 23%, and 3.7%, county by county. At the very top, West Palm Beach's luxury arc remains unmistakable, $8 million to $70 million price tags, a $40 million penthouse, and a decade that lifted luxury prices by 187.3%, while a neighbor's median reached $9,800,000 after a 118.2% 5-year ascent. Keep your eyes on the clock, the contract counts, and the coastal cranes, and join me for the next check-in as the second quarter's heartbeat becomes visible.